please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
It's about 2/3 of a percentage point higher. 10,500 has been conquered.
For the last 13-14 months, we were seeing virtually no volatility or misbehavior by this equity class.
Imposition of the long-term capital gains tax doesn't provide you with much revenue. So why are they doing it?
The market's up 60 points. It's been that way since the morning.
All things being equal, not a bad Monday?
Not a bad Monday at all. Good Monday, in fact.
Strong global cues lift the Lal Street. Nifty and Sensex rally close to 1 percentage point. HDFC Bank and Reliance are the top gainers, while SBI and Infosys drag.
Mid-caps outperform on steady volumes. The mid-cap index surges close to 1.5%, led by infrastructure, IT and bank stocks.
Bank of Baroda rallies 8% after reporting a 40% rise in net interest income. Sparks a rally in most PSU banking stocks. Even State Bank of India gets away with a fall of just 2.5% despite a bad loan howler in the third quarter.
Tata Steel surges 4% after reporting strong India growth in the third quarter. Sales are up 40% and profits rise fivefold.
Pharma stocks were the flavor of the day. Cadila, Aurobindo and Lupin rise over 2%, while Sun Pharma gains 1%. Well, those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talkback, the show where we tell you all about 8 hours of trading in the market in just 5 headlines. I'm Lata Venkatesh, with me, my colleague Prashant Nair. Hi, Prashant.
Hi, thanks, and thank God for this kind of a Monday, because, I mean, would have been unbearable otherwise.
We have had enough manic Mondays and a manic whole week.
Absolutely, absolutely. So over the next 30 minutes, we will discuss the top 5 market headlines, and our experts will join in to answer your stock questions. We have Dipan Mehta, who's member of BSE and NSC, joining us on the show. We also have Ashwani Gujral, technical expert, joining us. Gentlemen, thanks very much, both of you, for being with us here on the show. Before we come to the both of you, let's take a look at what happened as far as the markets are concerned. Friday left off in good shape. Wall Street, Asia picked up, and there was, in a way, no looking back today, at least today. Lata.
Well, that was the story, really. Nikkei wasn't trading. Otherwise, we were outperformers in Asia, but Europe outperformed Asia. So, in a way, we were in the best performing market in the 12-hour or 16-hour period, but we did good enough. Good enough for even bad results to be forgiven. And Bank of Baroda was a modest set, and it got an 8% thumbs up. And so much was the return of the bull, or perhaps I should say the short covering, not return of the bull really, that even bad results from SBI were forgiven. But the markets, according to what our tech gurus told us in the morning, have still ended below their near-term resistances. So we really need to get their word on whether this is it or this is actually sell time.
You know, so in terms of spots of market which did well, Lata, I just want to actually read out sectors more than anything else, because it was so broad-based. And it was good to see that. So the sectors will come up on your screen. Real estate, energy, private banks, in order of gains. So real estate was up 1.6, 1.7%. Energy, private banks, you had pharmaceuticals, which did well, metals and auto. Auto was up just about 1% or so. But this is, you know, the length and breadth of the market. I mean, actually, there was only one sector which ended in the red, which was the IT index. But it basically had a better, you know, relative to the rest of the market, IT has had it okay in 2018, so it gave a little bit away. Large cap gainers, Bank of Baroda, as you said, Tata Steel was up, Yes Bank, Aurobindo Pharma, IndusInd Bank, Maruti. I mean, just the top gainers there. In terms of losers, there was HCL Tech, there was State Bank of India with that 2% cut, ITC with about just a 1% odd cut. And mid-cap gains, just to give a sample of what happened, Canfin Homes, BEML, Amar Raja, Radico, there was Just Dial, Graphite India, IGL, and I could go on. Advanced decline was actually pretty strong.
Okay, fair point. I'm just worried about the quality of a rally where, you know, public sector banks are leading. There are so many of them posting losses, including the big boy. So it kind of scares me, but I think we should go to Ashwini on the matter. Good day, Ashwini. What's your sense? This rally has legs, or is exactly this the point where you would start looking for selling candidates?
Well, good morning, good evening, Lata. I think, 2 weeks of big expansion often leads to some sort of a sideways consolidation. Now, within a sideways consolidation, you will have up days, which will look like, the real thing has started again. And you'll have down days, which will make you feel probably the downtrend has started again. So this week, you have to identify the boundaries and trade the boundaries. Today, a lot of short covering happened in financials because basically crude came off strongly. So all kinds of NBFCs, financials, which had been hammered on Friday and maybe today in the morning also some shorts came in. So that way, it's an upswing. Let's not say that, the rally is restarted to, last year's levels and we'll go back to new highs. That looks difficult. It'll be a choppy environment, couple of days up, couple of days down. That sort of thing should be expected. So let's see if we are able to get past this 10,600, 650. Only then, any sort of real short covering will happen. As we heard today, that even today higher level calls were being written.
Okay. The second headline of the day is this. In the broader markets, mid-caps outperformed on steady volumes. The index surged close to 1.5%, led by infrastructure, IT and bank stocks. We've got a couple of questions coming in. Lata.
Okay, we will have to discuss the bank earnings separately because, aftermarket Bank of India also numbers quite bad. But let's get the questions first. Dipan, this one would be for you. Twitter user Sulabh Chokhani has 170 shares of Mindtree at 545 rupees. He wants to know if it's a good time to exit or he should wait. He's not looking to buy. What's your advice, Dipan?
See, Lata, our view on technology has been negative, and although we have seen a decent bounce coming through large cap, mid cap tech, I think it's a good opportunity for investors who are stuck in technology to take the plunge and exit out of their stocks. No doubt these companies are being great value creators, and maybe you could have 1 or 2 odd quarters where they do well as well. But the stagnation persists within the sector, and I do not see anything, down the line, maybe few months, few quarters also, which could kind of, reverse this trend and make these companies go back to that 15-20% type of growth rates, which they have given for the past couple of decades or so. So there's a paradigm shift in the way IT companies are operating. The entire environment has become very challenging for them, and these are no longer growth stocks, but the valuations are cheap, so they may not decline significantly. But then, in a market like this, if you're looking for growth stocks, companies where earnings grew by at least 15-20% or so, and IT companies do not particularly fit that requirement. So I would say at every rise, Mindtree and other IT stocks are a sell, and investors should look at getting into domestic oriented stories.
Okay. Well, another question. This one comes from Monica. She has a question on Godrej Properties. Okay, Realty actually did very well today, but Godrej, of course, is not one of those low-performing realty stocks anyway. Now, Monica wants to invest in this stock and wants to know the right time to enter the market. Hasn't given us a time frame. Do you like Godrej Properties, Dipan?
Well, I think, if you want to be in the real estate stocks, Godrej Properties is one of the better stocks to be in. You at least have the comfort of corporate governance standards, and they are very careful when it comes to utilization of capital or taking on more debt, and they have very decent projects as well. But, as an investor in real estate stocks, you need to be prepared for volatility in earnings. And these companies do not show a kind of a straight line trajectory growth rate. And there are many challenges project-wise, and there is RERA, and then, there's still confusion over whether real estate market is picking up or not. So it's a complex industry and a complex company to study. So unless you have to, buy real estate, then go for Godrej Properties, but there's no real need for an investor to invest in real estate per se. And as I said, I think there are many other choices within the consumption-oriented, maybe banks and BFCs, which could offer higher returns than, say, a Godrej Properties. But, if you want to buy in the real estate space, then Godrej Properties certainly, is one of the top picks there.
When you look at a price chart, monthly or whatever, 300 rupees a year back, and that is basically, you could associate RERA 2.8 but 300 to 800. Incredible move. Okay, let's move on to the third headline. Nifty Bank Index was close to 1% in the green today. Bank of Baroda's higher than expected interest income growth spurred a rally in the stock and took along other PSU bank shares with it. Even State Bank of India got away with just a fall of over 2.5% despite a howler of earnings. We are now, of course, getting numbers from Bank of India as well, and they don't seem too good either. Lata.
Yes, aftermarket Bank of India numbers were as bad a set, much worse than even State Bank of India. So first, let me address Bank of India. The numbers coming in with a 450 basis point increase in gross NPLs. That's, from a 12.5% to almost 17% NPAs. I mean, this at one point in time used to be, one of the marquee banks, but the last 10 years, I mean, it's already gone to bits, as it were. The slippages have come in at 18,000 crores. And again, there was a divergence from their view of NPA vis-a-vis RBI's view of NPA. The discrepancy was 14,000 crores. So it's a series of bad news. SBI was, of course, no better. SBI also had the same problems like Bank of India reported a net loss of 2,300 crore. SBI had reported a loss of 2,400 crore. And again, there was a huge NPA dash of 25,000 crores after kitchen sinking, as it were, in the first quarter with a 30,000 crore and again a divergence from RBI. RBI asking 23,000 crore more to be identified as NPA. So identical cases, but the market's in the mood to forgive. BOB, of course, relatively had a good set in the sense growth was very good. SBI did not have growth at all in advances. BOB had an excellent 16.5% growth in domestic loans. Margins improved substantially, actually, over 40-50 basis points. And cost to income was lower. And, of course, slippages were high. And both banks did not indicate that the worst was over. They believe FY19 will be a very good quarter, but they do believe that trouble will continue. That was the, message in terms of reading the fine print from both banks. Though, to be fair, Bank of Baroda results did show growth. SBI did not even show growth. So I want to get Ashwini's view on this. Ashwini, these kinds of rallies are not supported by fundamentals. Even Bank of Baroda with a decent set, I mean, it's not an 8% candidate. And SBI, that it got away with 2.5% is a bit of a wonder. Other banks, IDBI, IOB, all of them were, banks with losses and troubled balance sheets. What do you make of this PSU bank rally?
See, unfortunately, news does not move stocks one for one. It also matters where the stock is when the news is being announced. So if Bank of Baroda was at, say, 190, the response would have been different. Since it was at 150, I think there were already short positions, and anything can be given a positive spin. Today, the Bank Nifty wanted to cover shorts, and it latched on to that sort of news flow. At higher levels, the same stocks will again get sold into as well. They haven't really broken any new ground. Even on SBI, 500 points, Bank Nifty was lower on Friday. Today it opens down and obviously, pulls up a little bit. I don't think PSU banks have any sort of significant rallies. They will not be able to even get to the levels of the recap day. So chances are these are sporadic rallies.
Okay, we have some specific questions now. Rahul Merchant has written to us with a question on State Bank of India. He's got 50 shares bought at 303 rupees. He's got a 3 to 6 month time horizon, and he wants advice on if he should hold or sell. 50 shares of SBI at 303, price today closed at 290 or so. Ashwani, what would you advise him?
I think very recently the SBI chairman was given the Best Banker of the Year award, and then we come up with such results. Nothing is improving. Even if it does improve, maybe in 6 months, 1 year, and they'll be back to the same old tricks because these NPAs have been created because of these bankers. So I would move on. HDFC Bank, both are down 10%. You get in there, you get into Yes Bank, IndusInd Bank. Any of those choices will be better than PSU banks.
All right. Well, point taken. Let's take a break. Our experts will be with us to continue and answer your questions. let's also leave you with what a couple of experts had to say about BSE and NSE deciding on Friday to not provide data on Indian indices to foreign exchanges like the SGX.
I don't agree with the decisions, as you know, but it's opened up a debate, and I think we should have a very constructive debate on this as to what makes sense and what doesn't make sense, and in particular, concentrate on the revenue side, and therefore the other side being the incentive side for investors. We'll have to wait and see as to how protectionist the government becomes and what are the arguments for imposing or getting SGX to collaborate with the GIFT.
These are commercial decisions which they are taking. I don't think so it is retrograde, but they are trying to ensure that liquidity in those indices stay in the country. So I don't really say it is retrograde.
Welcome back. You're with us here on Markets Today Talkback. Dipan Mehta and Ashwani Gujral have been taking your questions. So let's move on to the fourth headline of the day then. Tata Steel was a top Nifty gainer after a strong India operational performance drove earnings in the third quarter. Both revenue and EBIT, that is the core operating profit of the company's India business, were a beat as compared to the same quarter last year. Let's actually dissect these numbers a little bit more in detail. It's a big one. The stock was up 4%, as I said. Nigel is standing by with more details. Nigel.
Well, that's right. Tata Steel delivered a very strong set of numbers. Top line strong growth, margins of around 17%, and they delivered a healthy net profit as well this time around. But for Tata Steel, the geographic breakup is most important. And the Indian operations, that did very, very well. Much better than what the street was working with. The EBITDA per ton came in at around 14,000 rupees on a per ton basis. The street was working with a number of around 12,000 rupees on a per ton basis. How did they manage to beat what the street was working with? Well, better operating leverage did play out because their sales numbers, that's the sales volumes numbers, were up by close to around 10%. They had some low-cost coking coal inventory as well. That's what helped them out. And low conversion costs on the whole, that's what did help them. Remember, realizations were higher both in India as well as in Europe. But in Europe, on a EBITDA per ton basis, well, that came in at around $40 on a per ton basis. And that was lower than the $50 per ton that was anticipated. Southeast Asia, well, that is a smaller part of their business, but that did quite well. Brokerages, they're quite enthused. Macquarie, for one, they expected prices to maybe trickle down, but the prices are more resilient than what they were working with. So that's why they've upped their target price. They've also, changed their rating to outperform from underperform. IDFC, there as well, the target price stands at around 873 rupees, but they're expecting European operations to improve going ahead. And Credit Suisse as well, they have upped their target price. They're expecting higher steel realizations and better European spreads. That's what's going to help them out. Tata Steel, the big gainer today.
Okay, thanks a lot for that, Nigel. There is an SMS from a gentleman, Shubrato Day. He has 100 shares of Tata Steel. He bought them at 171 rupees 3 months back. Wants to know if he should hold or sell. Dipan, what should he do?
I think short term remains positive for the entire metals pack and Tata Steel in particular, and their focus on domestic operations and expanding domestic capacity is a step in the right direction. And eventually, when Europe has been spun off, then the kind of losses over there will eventually get curtailed, and Tata Steel will turn out to be a more de-risk kind of a company as some of the other steel companies are there in India. But I would just say that long-term trends of metals and mining companies is always very uncertain. And I just like to give the example of sugar companies and entire right to 2016-17, we had sugar companies come out with great set of numbers and fabulous price volume action, and now the entire cycle has turned over there. And we are seeing disappointing and steep declines in profitability. It's not unlikely, and it's more likely that in future, maybe a couple of years down the line, the same scenario may play out in the metals stock as well. So you need to be a bit cautious when you're investing in commodity stocks. But yes, I think for the time being, best to remain invested. It's on a good, strong momentum rally upwards, which may sustain at least for a couple of more quarters.
Okay, so that's Tata Steel. Stay put is the advice. And the final headline. The pharma stocks were buzzing in trade today. Shares of Cadila, Aurobindo and Lupin were up over 2%, while Sun Pharma was close to 1% in the green. Ekta Batra is here to tell us more about some pharma stocks. Ekta?
Well, yes, a lot of pharmaceutical stocks in focus today. I'll start with Sun Pharma, where sources did tell me that the Halol plant inspection has begun today. Plus, they do have their Q3 numbers, which are coming out on the 14th of Feb. Cadila in focus because the Mariah plant did get 0483s in terms of, or zero observations from the US FDA. That is actually positive news. It's the third inspection of the Mariah facility in the past 1 year, and all of them with 0483s. Lupin in focus as it launched Tamiflu generic in the US market. So positive news coming there. And lastly, Fortis was in focus. It saw some amount of trepidation ahead of that Q2 and Q3 board meet, which is going to take place tomorrow.
Ekta, thanks very much for that. So there's essentially some reasons behind this move that we saw. We've got a question. Twitter user Karthik has 1,000 shares of Biocon. He hasn't mentioned the price that he's bought them at, but he basically wants advice whether he should hold, sell, or buy more of Biocon. The stock left off at 610. The all-time high was 657. Ashwani, what would you tell Karthik?
See, first of all, a request to people is that if you don't give the price, you may have bought it at 670 or you may have bought it 400. The advice is different. As far as, just random advice is concerned, 560 is the recent low. Okay. If we break 560, you should probably be out. But for the moment, I think it's getting back into some sort of an uptrend. Maybe 700, 720 is a decent target here.
Fair point, Ashwani. And thank you very much for making sense of even inadequate questions. Thank you very much, Dipan, as well, for joining in and answering all our questions. With that, we wrap up this edition of Markets Today Talk Back. Thanks a lot for being with us.